Last week's economic calendar proves there doesn't need to be a packed schedule for the markets to move. We only had two key events, the US midterm elections and US CPI. However, foreign exchanges, the cryptocurrency markets, commodities and equities were on fire, set ablaze with a volatile mix of dollar weakness and market shocks. All this begs the question, could there be any more surprises left in 2022? Hello, I'm Nick Quinn and this is your weekly markets forecast from the team here at ForexSignals.com. So what's on tap for this week? Firstly, an overflowing economic slate. The upcoming 5 sessions feature a broad collection of retail sales, industrial output and energy reports. The headliners are inflation numbers out of the UK and the European Union. Hot on the heels of last Thursday's US CPI pullback, talks of a dovish pivot are growing louder. Are they justified or premature? By Friday's closing bell, we'll know much more about the state of the global inflation landscape as 2023 draws near. Let's check out a few of the key market events for the third trading week of November with our analyst Connor Woods.
So then, kicking us off on Monday, we're going to be focusing on the energy sector and the release of the OPEC monthly report. If you remember last time out, the OPEC Plus nations decided to cut production quotas by 2 million barrels per day, and that's why we've seen this uptick in the oil price. If we have a look at the price action on the chart, this is a H4 chart. You can see clearly that the balls are in play at the moment. You can see this weekly low liquidity that we had spiking into this demand zone, wicking perfectly to the pip and immediately trading up. If traders can get some sort of retracement down to the mid 85s, then the targets in mind first of all will be this weekly high we had from last week at 94, and also there's no reason why oil can't reach $100 per barrel in the next coming weeks or maybe even next week. Moving swiftly on to Tuesday, the early week trade driver will be the Japanese yen because we have their GDP figures on a year-on-year basis coming out. The number is expected to come in at 1.1%, which is down big from Q2's 3.5%. And if these projections are accurate, then this shows that Japan's economic growth is fading despite the Bank of Japan's commitment to this weak yen. And we can see on the chart right now we had this really big sell-off in USD yen in the markets after the US CPI came out. Now we're at really critical levels right now, and this is the daily chart. First of all, we need, for the bullish nature to stay intact, we need this low to hold. If it doesn't hold, the next level of support that could potentially come in will be this mitigation area that we have. And I'll just mark that now. This mitigation level around 138.9 could come into play early next week. From here, I'm expecting some support and a move up towards the mid 140s. Wednesday is all about the UK when it releases its CPI figures, and this is the primary tool for measuring inflation in an economy. The CPI month on month is expected to soften by 0.1%, and a slump in CPI would be welcome news to the Bank of England amid their current rate hike cycle. The most volatile market we're going to see on this day will be the GBP USD chart, the cable chart, and as you can see, we are starting to form this base in GBP USD from a broader weakening DXY chart. So potentially we could get a continuation trade on the cable, and the level that we're expecting to see some sort of support will be this demand zone that we have down here. Now the dollar is extremely oversold on a lower time frame at the moment, so we could see that retracement which would bring the cable chart down towards this demand zone where we could get a continuation trade higher. Alternatively, we'll be looking at the 50% of this candle imbalance that we have in here to act as a real catalyst at this 1.5 level to spring GBP USD to the upside. Although we are approaching the end of the week on Thursday, the volatility is really likely to remain, and this time it's coming from the euro because the EU are releasing its CPI figures. Now the year-on-year figure is expected to fall 0.7%, but the month-on-month is expected to remain flat. If these predictions are correct, then euro may be in for some heavy volatility, and a really key chart to look at is this euro Swiss franc chart. Now you can see on the 4-hour chart we have this real balanced price action that we have here, so there's no reason why, if we can get a break below this low at 0.982, we'll see the prices just sort of slump down and test at least this level at 0.973. eyes on for this Euro Swiss franc chart because it's opening up some fantastic selling opportunities. On Friday, we wrap up the week with a big day of UK retail sales, and as economists hotly debate the presence or eventuality of a global recession, in many instances retail sales and consumer confidence are large parts of this argument. Now overall, UK retail sales and therefore consumption are likely to come in much stronger than they did in September, and if this is the case, then we could see a few bids for UK equities. However, the expectations are really high, so if we disappoint, we could see a sell-off, and the market we're going to focus on is the FTSE 100 because we're approaching, and this is the daily chart, we're approaching a key daily supply zone that we have up here. Now in order for the bullish nature of the FTSE 100 to be intact, we need to see a break above this zone. If we do, we could get a continuation trade higher. Alternatively, if we see price action like we're seeing right now, we could see a move down and testing at least the 7,000 level.
The primary underpinnings of last week's trades were uncertainty and inflation. This week features more on the inflation front as well as an array of sales figures. However, there is much more headed our way. The 5 events and markets we've pointed out are only just the beginning. The markets are also set to receive news on Canadian inflation, Australian employment and American retail sales. Undoubtedly, one is well advised to stay current on this week's economic calendar as it unfolds. Another great way to stay abreast of the market movers and shakers is to join us in our trading room. Our team of analysts will break down the vital events of the day in real time, along with passing on any relevant trade ideas. Until then, trade well, and we'll see you in the next live stream.